Hey everyone, welcome back to Crypto's News. It's me, Omar Bam, aka Crypto. Happy Friday, January 10th, 2025. We have a lot to talk about today because we have so many different entities out here that are considering adding Bitcoin to their own treasury sheets, which is massive. We're going to be digging into that, taking a look at prices and much more. So stay tuned, guys, and welcome to the show. So we're looking at the prices here. We have currently the market caps overall for crypto at 3.449 trillion, up 1.4% on the day. We have Bitcoin up 2.4% specifically at $94,832.22, still down 3.6% over the last 7 days. And we have Ethereum likewise up a bit, 1.3% at $3,272.40, down 9.2% on the week. So it hasn't recovered all those gains yet, but that could be changing. It really depends on quite a few things, but we got a lot of good news today specific to the digital asset economy that are giving it a nice boost relative to stocks and the like, which we'll look at right now. Gas prices really low for Ethereum, so maybe a good time to do those layer one transactions for you guys. It was really unusual last night when I checked CoinGecko to see the gas prices. They were zero. I was like, free transactions on Ethereum, woo woo, but I had nothing really that I had planned to do. So yeah, I don't know if that was just a glitch, but I hovered over here, fast, standard, and safe for all zero, which is quite crazy as far as fees. Have not seen that before. Anyway, we talked about how this employment report was coming out today, and it did release and cause stocks to plummet quite a bit. You can see Dow down almost 700 points, right? CNN Business, after blowout jobs report, dashes hopes for more rate cuts. And we had the S&P 500 down as well, 1.54%. NASDAQ down 1.63%. Fear is driving traditional markets, maybe into the crypto market. And if they're not paying attention yet, they really should be if they're reading some of these headlines that are out there. Anyway, the Dow dropped, of course, because of this report, along with these other stocks as well. So it looks like the economy added 256,000 jobs in December, far outpacing expectations of 153,000. So overshooting by over 100,000 jobs that were predicted, signaling a healthy or hot economy. So traders are now only expecting a 2.7% chance that the Fed cuts at this meeting coming up on the 29th of January. So Treasury yields then spiked to 4.76% on the 10-year. On the 30-year, we had a spike up to 4.95%. The strong jobs report sends yields higher amid expectations of the Fed to pause its rate cutting cycle for a significant period of time, according to Ross Mayfield, an investment strategist at Baird. We're hearing from other different institutions, financial institutions as well, and what they're expecting. Analysts at Goldman Sachs are expecting just 2 cuts this year from the central bank. Bank of America now believes that the Fed is actually done cutting rates and may in fact need to start raising rates, how we suspected yesterday would become part of the discussion going forward here. We think the cutting cycle is over, said a senior U.S. economist at Bank of America. Inflation is stuck above target with upside risks. The conversation should move to hikes, which could be in play. I think that does have the potential to impact the crypto market as well. If we do begin hiking rates, that could impact us negatively as well as stocks. So we're hearing from Morgan Stanley as well. They're expecting the Fed to cut rates in March. The report should reduce the probability of near-term Fed cuts, though our more favorable outlook on inflation keeps us thinking a March cut is still more likely than not. And I guess more dismally, we're hearing from others such as well, I can't find the name of the institution right now, but pretty much we're expecting just pretty much 1 to 0 rate hikes overall for rate cuts this year going forward. So just wanted to give you guys an update on that after this Fed report. So we would have thought that this report would lead to crypto going down, but because of some of the news, it hasn't. But before I move forward to that, I have this comment here by Banana Boat Spirit about the December jobs report, which came in stronger than expected, which means more jobs, more people with money, more people spending, more inflation, no need to cut rates. Even before this news, only 25 basis point rate cuts were planned for the year, or expected rather, looking at that Fed Watch tool. I'm not trying to bear post. However, this could very well be a limbo year for us if inflation or the threat of it persists. So as long as we stay below last cycle's all-time high, I'm still a dumb happy accumulator. And Dreth further said under a comment, don't forget that even though the Federal Reserve has been firm on its inflation targets, and that's theoretically a good thing, the spending on interest payments is enormous. I think this is a key point to take away here, because regardless of these jobs reports, there could be issues when it comes to the solvency of the United States that will force the Fed's hand and force them to cut rates. If the US continues having such a large deficit, no matter what the inflation target is, the Fed might have to let inflation go a bit above target to protect the solvency of the US and its credibility in the markets, or the government will have to somehow cut down spending or increase income, more taxes. Key is stability, and we are likely to see the Fed juggle between these two things mentally while keeping face, saying it will focus on inflation. Even if they focus on maintaining inflation within the target, they simply cannot ignore whatever the government does forever, and vice versa. The government cannot ignore this interest spending forever either. And yeah, the Federal Reserve is not federal. It's not the government, if you're confused a little bit with that quote and you're not really aware. Maybe you're newer to all of this. Anyway, seeing these huge climbs in Bitcoin. So this was posted by Eric Crown, one of the traders I most respect and I was privileged to have on the show, I believe twice. Really cool guy. Have you ever seen 14 green hourly dildos in a row? Yeah, that's huge, these hourly windows. I have not in recent memory seen that without any sort of retrace. Bitcoin going all the way down here from the lower end of $90,000, around $92,000, all the way up to $94,982.81 when he posted this chart. And we should always remember that there are going to be corrections. This happens in every bull market. And I still look at this chart sometimes. And it's like my first real cycle, I would say, in crypto. Really, I was primarily holding Bitcoin, eventually Ethereum throughout this cycle. And man, was it painful to hold on through it and to keep the spirit alive and to even keep doing videos when it looked like I could be wrong at any point, as we had these huge corrections that were over 30%, even up to 38% at some times. So you really kind of have to have a strong stomach if you're going to be in this market and be quite patient through these cycles and not buy a lot of these fear narratives that do exist, especially when you zoom out on the bigger picture. You think about what inflation really means. That just means that there are more fiat money that is chasing a similar amount of goods, in some cases even lower amount of goods, which creates higher prices for everyone. So more and more of dollars, of euros, of all these things being created will cause more pain in people's wallets, unless perhaps they're holding some Bitcoin at the very least. So let's start off here. Welcome, guys. Hey, nice to see y'all who are just joining here. Hey, Wendell. Hey, Scott. Nice to see you. Yeah, 2017 OG. You were there with me? Yeah, that was hardcore, dude. So state of New Hampshire proposing a state treasury to invest in precious metals and digital assets. So even though you're seeing that the Bitcoin logo is pasted on here when it was posted by the Bitcoin magazine, not a surprise that they would put the Bitcoin logo. Anyway, it is for digital assets and other kinds of precious metals besides gold. That would include, as it says here, silver, platinum, for example. But perhaps they would seek exposure through something like an ETF, which you can currently get exposure to different cryptocurrency products through that include things like Bitcoin and Ethereum. So this could potentially even impact Ethereum if they decide to open up their treasury to that as well, if this proposal goes through. So we could see both Bitcoin and Ethereum potentially being added here. People are saying they left it as just digital assets very vaguely here, so it wouldn't just get downshot right away. But I think pretty much everyone should know what Bitcoin is. So putting Bitcoin, if that is what they meant here specifically, they would have done. So they're probably trying to be more forward thinking here and thinking about other kinds of digital assets that they could incorporate as well as just Bitcoin, which surely probably would be the first thing, the most conservative digital assets to add on there. Besides New Hampshire, we also have North Dakota that is introducing a bill for a strategic Bitcoin reserve. So just another state as well that could potentially be adding it as well. The North Dakota bill already has 11 sponsors, so it looks like it's making some headway there to get approved. Also, we have a new company here that trades on the NASDAQ here, the Heritage Distilling Holding Company, HDC or Heritage, sets the stage. They wrote out in a public press release, sets the stage for the company to lead the craft e-commerce space in accepting Bitcoin as a form of payment and hold Bitcoin as a strategic asset. They are a lead craft distiller of innovative premium brands. They right here announced today that their board of directors have already approved the adoption and release of a Bitcoin Treasury policy statement as part of a broader corporate sales and treasury diversification strategy. I love this new theme that's playing out of treasury diversification with Bitcoin being the primary beneficiary of this, but as we're seeing other digital assets as well potentially going forward. As part of this, it's going to enable the company to lead the craft spirit space in accepting Bitcoin as a form of payment for its products and services via its direct-to-consumer e-commerce platform and allow the company to acquire and hold Bitcoin as a strategic asset. So this is also following the recent formation of the cryptocurrency committee and the board's technology and cryptocurrency committee that's going to be led by Matt Swan, who has been helping with the digital payment space for quite some time now. And what's interesting about this is that not only are they just diversifying what they already have, not only are they going to go out there and acquire Bitcoin by buying it or through taking out some sort of loan in order to accrue more of these things. No, they're actually going to be accepting Bitcoin on their e-commerce website, direct to consumer, and then holding that Bitcoin that they acquire. So that is of note here, that they are going to be using it for purchases as well, which is something that I do like to see and could further fuel innovation in the payment space and even further the missions of those who are trying to allow for Bitcoin to be used as payments through alternative means with lower fees, perhaps like something like the Lightning Network, for example, right? If something like that gets adopted. Anyway, Kenya has also drafted a policy to legalize cryptocurrencies. Pretty much it was a ban on cryptocurrencies before, and we have heard warnings for them in the past in relation to cryptocurrencies, such as this one by the Central Bank of Kenya on December 2015, a caution to the public on virtual currencies such as Bitcoin, talking about how they're unregulated digital currencies, Bitcoin and other virtual currencies. They're not issued or guaranteed by any government or central bank. They warn that Bitcoin is largely untraceable and anonymous, making them susceptible to abuse by criminals and money laundering and financing of terrorism. Just the same normal stuff that we've been hearing over the years. But this goes all the way back to December 2015. And slowly they've had an about face here. They're realizing that they're having massive capital flight out of the country as you have these illegal actors who are not paying their dues. Since the space is largely unregulated in Kenya as it stands right now, pretty much altogether. Instead, they're going to be drafting this framework to enable for these services to operate under the regulations in the public eye and for them to get their say and their money, of course, out of all of this. So I think this is good, right? Instead of just calling it an outright ban or warning people against it, this could pave the way for more people to have access, for more exchanges to exist that under the law that will protect their customers versus people having to go into shadier black markets to accrue virtual currencies for remittances or for whatever needs that they might have personally. And we're not just talking about illegal things here. But again, legal or illegal is just something simply that is signed into law, right, by politicians who might not actually have your best interests at heart, right? Like the Freedom Act does the opposite of freedom. It actually restricts our freedoms. It's very similar in many cases, many laws, right? Anyway, so really cool to see this coming out from the Kenyan finance minister, John Mbadi. I hope I'm pronouncing that right. I'm probably doing that wrong. Texas legislator Giovanni, here where I'm at, Giovanni Capriglione says, I want Texas to have a strategic Bitcoin reserve first. Well, it looks like you're not going to be first. We already got New Hampshire. We got North Dakota here with 11 sponsors kind of ahead of you guys. But you can still join the party. It's still quite early, Texas, if that's something that you want to do. And this is really the big one. This is the big bombshell. This is the first thing that I saw when I opened up Twitter, actually shared to me by like Twitter on the right side by itself. And I almost couldn't believe my eyes when I saw it. But it looks like Meta, the operators of platforms like Oculus, such as Instagram, such as Facebook, they are looking like they're getting ready to add Bitcoin possibly to their treasury. So let's take a look at this entire assessment that they put out, the statement, which came out a little while ago, it looks like, but it's really leaking now. Anyway, it's huge. You guys are going to want to hear these words, and a huge nod at Bitcoin. As of September 30th, 2024, Meta has $256 billion in total assets, $72 billion of which is cash equivalents, and marketable securities, including U.S. government bonds, whack, corporate bonds, whack. Since cash is consistently being debased, true, and bond yields are lower than the true inflation rate, even have a little citation there, 28% of Meta's total assets are consistently diminishing shareholder value simply by sitting on the balance sheet. Meta should and perhaps has a fiduciary duty to consider replacing some percentage of those assets and assets that appreciate more than bonds, with assets that appreciate more than bonds, even if those assets are more volatile short term. Due to its verifiable fixed supply, Bitcoin is the most inflation-resistant store value available. This is especially true compared to other liquid assets. As of December 20th, 2024, the price of Bitcoin increased by 124% over the previous year, outperforming bonds by roughly 119% on average, as we've discussed in this show before. Over the past 5 years, the price of Bitcoin increased by 1,265%, outperforming bonds by roughly 1,262% on average. Bonds. Meta founder, CEO, and chairman Mark Zuckerberg has named his goats, so his pet goats, Bitcoin and Max, or maybe it's Max and Bitcoin, Max Bitcoin. Meta director Mark Anderson has praised Bitcoin, is also a director at Coinbase. Do Meta shareholders not deserve the same kind of responsible asset allocation for the company that Meta directors and executives likely implement for themselves? I mean, it's quite obvious, obviously, that Mark Zuckerberg has Bitcoin if he's named his goats, or named one of his goats Bitcoin. Meta's second largest institutional shareholder, BlackRock, we can't ignore BlackRock board while we're writing this out to them, advised that a 2% Bitcoin allocation is reasonable. The reasoning behind that allocation holds true for Meta's assets as well. Corporate and institutional Bitcoin adoption is becoming more commonplace and proving to be an effective strategy. For example, MicroStrategy stock has outperformed Meta stock by 2,191% over the past 5 years. More public companies are adding Bitcoin to their treasuries every week, and now we're also going to be including states and probably ever more countries besides El Salvador, who continues to stack. So many big entities that are piling more into Bitcoin here in their treasuries. BlackRock's Bitcoin ETF is the fastest growing ETF in history, and the U.S. federal government and some state governments may form Bitcoin strategic reserves in 2025. Meta has always, wow, the U.S. federal government may form Bitcoin strategic reserves in 2025. This seems wild to me, again, just covering this almost on a daily level since 2016. Meta has always been a forward-thinking, innovative company, not a company that follows technological trends, but one that sets them. The company has an opportunity to honor that tradition by being a leader in corporate Bitcoin adoption and corporate treasury management, apt for the 21st century. At minimum, Meta should evaluate the benefits of exchanging some, even just a few percent of its cash and bonds for Bitcoin. Resolved. So this has been resolved, they wrote here. Shareholders request that the board conduct an assessment to determine if adding Bitcoin to the company's treasury is in the best interests of the shareholders. And I'm going to go with yeah. Yeah, just like hinting here to the board. I think this is probably going to be passing, as this is a forward-thinking company, as they mention here. I mean, you can see it in many cases, especially with things like AI and virtual reality being added to a big part of their missions, right? So adding cryptocurrency in a serious way should not come as a surprise. And we had Bitcoin for Freedom right out. I actually think that new Zuckerberg can be based enough to put Bitcoin on Meta's balance sheet. So yeah, I mean, we've seen quite a transformation here from Zuckerberg to what he's become. Seems like a much cooler guy, much warmer. I don't know what he's doing. It looks like he's getting more sun. I've seen him surfing. And this definitely looks more like a Bitcoiner, like a hardcore Bitcoiner, I might even say, as opposed to the corporate guy on the left who might have just added it for like, I don't know, for money. Maybe this guy just cares about like, I don't know, clout and influence. And in order to stay relevant, adding Bitcoin would be major, I think, for Meta here. So that's the big news on the day. Wanted to share that. And this final comment here that was posted by Every Doge Has Its Day. Thank you for posting this comment when I had tweeted that news. 99% Microsoft shareholders rejected their proposal last month. Hopefully a better result here. But I do feel like Microsoft has a very different ethos than Meta does. I can way easier see Meta doing this versus Microsoft. So I actually still think this has a shot, but it's not a guarantee, of course. We do have to wait for that vote. But hey, that could be more good news coming up for us in the future. Pumping your short-term Bitcoin dollars. There is a new episode on Futurama related to Bitcoin about mining Bitcoin. You can check it out for yourselves. I won't play it because of copyright issues. So just this conversation around Bitcoin is not dying. We are not in the doldrums. It's not even the boredom phase, as some are saying out there. There's so much news coming out on a daily level, especially on a weekly level here, just starting off 2025, that it's harder and harder for you to ignore digital assets and Bitcoin more specifically. Also, Cynthia Lumas coming out encouraging people to buy and hold Bitcoin for the future and retirement here on CNBC, talking about the government basically, or the Federal Reserve, however you want to say it. It's really both of them together, right? The government issues out debt in the form of bonds. The Federal Reserve prints money in order to buy those bonds. So they really work kind of in tandem together to debase your currency to the tune of trillions, as she mentions here. And the responsible thing for their future retirement would be to buy and hold Bitcoin. And then she seemed really emphatic and passionate when she actually did this chat. So super cool. Not a surprise. She's been a staunch supporter of this digital asset space for quite a time. Also, U.S. Senator Ted Cruz on Bitcoin. This is quite a surprise. I have a weekly buy order to take advantage of dollar cost averaging. Has he been watching this show? I'm just kidding. There are plenty of people who know that one of the best ways to get involved is buying a set amount or a specific amount of Bitcoin, let's say $25 worth of Bitcoin every single week, whatever you can afford. As I've said all the way going back to the beginning of this show, that's something that U.S. Senator Ted Cruz does. And that kind of takes away a lot of that antsiness on, should I buy today? What if the price does this tomorrow? What is this the low? Is this the high? No, irrelevant. You're just stacking more. And that tends to be providing for most people the best results, just buying over time. I've been investing for several years, said Ted Cruz, over which time Bitcoin's value has roughly tripled. So what he was buying, when it was like $30,000, I guess. So we are celebrating 1 year of Bitcoin ETFs. Those launched 1 year ago, and they, as we had mentioned earlier, became the most, on that Meta statement, the most successful ETF launch in history. Noting BlackRock's ETF specifically. We also have the U.S. enforcement chief behind the CFTC, the Commodities Futures Trading Commission, which is more in charge of commodities versus securities, which is what we see from the SEC. They still have to do a lot of enforcement against various projects. Usually those kind of enforcement actions are structured a little bit differently. But the enforcement director, Ian McGinley, is going to be leaving the agency. He led all sorts of enforcement actions against the likes of Binance, oversaw FTX's collapse. He saw and the subsequent return of funds to people who are due, which I think is actually a good thing. In many cases, that's actually better than what the SEC does. The SEC just like files penalties for the most part, takes down projects, says you cannot be the head of a company for X amount of years, whatever. They actually helped people get back funds that were lost here in this case. But he is going to be leaving, and we will see who comes up next. And the SEC does, as it says here, tend to be the premier enforcement agency for digital asset enforcement. They kind of come out ahead. People kind of look at the SEC, but we do see that the CFTC does a lot of work here as well when it comes to that. There was also this news that was leaking out. You might have gotten a letter from Coinbase if you had interacted with Polymarket, a prediction market, to bet on the outcome of different events. Like I had seen this one where people are betting on whether the wildfires in the Palisades region in Los Angeles will reach into Santa Monica and beyond, I suppose. So that was like a 13% chance that it would move there. And there was this discussion of like, is this good that people are betting? What if like they make the fire spread? But at the same time, those people voting can just as easily vote that it won't spread and help put out fires, which would be just as good, as was noted by Eric Voorhees in that discussion. But anyway, back to the matter at hand with the CFTC, which, as Ian McGinley leaves, had sent out a subpoena to Coinbase for customers' informations related to Polymarket. So Coinbase wrote an email to customers saying, "We write to inform you that Coinbase has been served with a subpoena in the above referenced matter, seeking general customer information that includes information related to your accounts or account. No action is required from you, but Coinbase may be required to send information related to your accounts to the Commodity Futures Trading Commission in response to the subpoena unless Coinbase is formally served by the close of business on January 15, 2025 with a motion to quash or other legal filing that prevents Coinbase from sharing this information." And in a letter to CoinDesk, we had more information. We've heard this kind of thing in the past. Coinbase subpoenaed for information, and they have to, by law, give out that information, though they do their best to minimize what they have to do to the benefit of their customers. They wrote this in response to CoinDesk, Coinbase spokesperson. "When we receive requests for information from a government, each request is carefully reviewed by a team of trained experts using established procedures to determine its legal sufficiency. Where necessary, we will seek to narrow requests that are overly broad or vague in order to provide a more appropriately tailored response. And in some cases, we object to producing any information at all." So wanted to give you a heads up on that, of your information that could potentially be shared with the U.S. government in relation to this case against Polymarket. Also celebrating 1 year today, January 10th, very special. Bitcoin version 0.1 was released in a letter to the cryptography mailing list. What am I saying? Hal Finney had this to say, and he was the recipient of the first Bitcoin. Many suspect he was Satoshi. I have seen numerous articles and essays talking about how it's not likely that he is Satoshi. So really, I have no care either way specifically, but I think he was a really good guy, an important figure in Bitcoin history. And he wrote this on January 10th. "It's interesting that the system can be configured to only allow a certain maximum number of coins to ever be generated. I guess the idea is that the amount of work needed to generate a new coin, a new Bitcoin, will become more difficult as time goes on. One immediate problem with any new currency is how to value it. Even ignoring the practical problem that virtually no one will accept it at first, there's still a difficulty in coming up with a reasonable argument in favor of a particular non-zero value for the coins. As an amusing thought experiment, imagine that Bitcoin is successful and becomes a dominant payment system in use throughout the world. Apparently, it's first going to be gold 2.0, brah, how on that road. Then the total value of the currency should be equal to the total value of all the wealth in the world. Current estimates of total worldwide household wealth that I have found range from $100 trillion to $300 trillion. That was back then, before the massive amount of inflation that we have seen since then, right? With 20 million coins, that gives, so like almost 21 million, so assuming 20 million coins, that gives each coin a value of about $10 million. So the possibility of generating coins today with a few cents of computer time may be quite a good bet. He quite nicely predicted and suggested to folks who had read this, with a payoff of something like 100 million to 1. Even if the odds of Bitcoin succeeding to this degree are slim, are they really 100 million to 1 against? Something to think about, wrote Hal. Dang, if we had such great discourse and these kinds of mailing letters these days. Instead, we have discords that try to scam us and ran by AI that might not even be a real person. Dang. I really wish I had been part of that mailing list early on, but I probably would not have understood Bitcoin at the time. I've learned so much by sharing this information. So always thanks to you guys for letting me be here and learn with y'all. Anyway, there is Hal Finney. He also tweeted out running Bitcoin today. He wrote running Bitcoin, and 1 year later, it's still running. I mean, I'm sorry, 16 years later, still running. 1 year since the SEC got hacked, also another celebration, and posted this. So I had shared this news back then when this came out, and we had seen a tweet being shared by the SEC, the official SEC X account. Today, the SEC grants approval for Bitcoin ETFs for listing on all registered national securities exchanges. The approved Bitcoin ETFs will be subject to ongoing surveillance and compliance measures to ensure continued investor protection. And then they had here the honorable, venerable chair, Gary Gensler, saying today's approval enhances market transparency and provides investors with efficient access to digital asset investments with a regulated framework. We've never heard something so kind, actually, from Gary Gensler. So as soon as the SEC wrestled control back of their account, they posted this, or actually Gary Gensler posted this. The SEC Gov Twitter account was compromised and an unauthorized tweet was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange traded products. You can't even protect your own freaking accounts. How are you going to protect other folks, SEC? I remember what a joke this was at the time to witness play out in real life, because there were so many Bitcoin proposal ETFs that were up, and we were hearing any day to hear from the SEC. So everyone was waiting for that with bated breath. And when we saw that tweet, I mean, obviously it pumped markets and subsequently caused a correction that might have wrecked some traders, but just absolutely wild how the SEC again leads to innocent folks losing money here. I like this quote here by Rajat Sani. I first found this guy, maybe I've seen his tweets before, but it was yesterday in relation to a New York Times article that I didn't want to share at all because, first of all, I mean, I've said before, my distaste for the New York Times. I can't believe that I grew up thinking that waking up in the morning, reading the New York Times, buying the newspaper, having a cup of coffee was such a great way to be such a well-informed citizen and intelligent person. I can't believe that I actually bought that. But their headline was something about how Bitcoin is the new form of white privilege. And Rajat had said, I guess I'm white now, right? Which, I mean, if you can see his picture here, he's clearly not very white looking, but he said, I guess I'm white now. I just found out. The cost of food will rise 50% plus by 2030 if you're saving in US dollars. The cost of food will fall 80% plus by 2030 if you're saving in Bitcoin. I think that very well could be the case. Seeing more and more of these treasuries come out, Bitcoin not dying, becoming stronger, becoming more understood by folks around the world, becoming stronger by more mining, which again has increased hash power to levels we've never seen before starting off this year. It's not going away anytime soon. And until we go into that potential scenario where everything, all of the wealth is transacted through Bitcoin being the primary payment system that Hal Finney had said in the cryptographic mailing list, until we get to that point, it's probably going to be better for you to hold Bitcoin versus fiat, as it will get debased faster and faster due to the very exponential nature of having to pay down ever-growing debt and printing money to do that, right? Anyway, here is our quote of the day, another Bitcoin-centric quote posted by Bitcoin Breakdown. If you think Bitcoin is complicated, wait until you learn the Federal Reserve is not federal and has no reserves. Powerful, quite powerful. Yeah. Anyway, that's the show I have for you guys today. What a day. What a bunch of headlines. Definitely, if you are just joining us now and missed the earlier part of this video, it was like wham, 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 wham of headlines of these new entities that are seeking to add Bitcoin, if not already approved plans to add Bitcoin to their treasury, including Meta, who is putting forth a proposal for the board to add that, at least a couple of % here, it looks like, into Bitcoin to diversify away from bonds that are not beating inflation and therefore are not really a good conservative hedge at all. Anyway, let me know what you guys think about this video, what you think of any of these headlines and anything that I might have missed, because they continue to come out as the day goes on. Anyway, I'll catch you guys hopefully tomorrow for the next one. We'll see what plays out between now and then. I look forward to sharing with you guys. Remember to hit like if you enjoyed any part of this video, to subscribe if you're new to this channel, turn on notifications so that you know when we're live, and stay cryptic. Peace.